Have you ever wondered why mortgage rates are moving the way they do? It's not always about inflation or job numbers. Sometimes unexpected events across the world can shake things up. So today we're going to break it down in a way that actually makes sense. Hey everybody, welcome back. Today we're going to be breaking down what's really going on with mortgage rates, home sales, and the general real estate market. There's a lot going on, from the global economic shifts to the Fed's latest moves. And I want to make sure you have all the information you need, whether you're thinking about buying or selling, or just keeping an eye on the market. So let's get started. Lately, mortgage rates have been on a downward trend, but it's not because of what you'd normally expect, like lower inflation or rising unemployment. Instead, there are two important factors at play. One, China's AI market, and two, Colombia's economic positioning. If you haven't heard, AI has shaken up the stocks. China's new AI model, DeepSeek, was a big deal. That led to a massive tech stock sell-off, which caused investors to move their money to safer assets such as bonds. This played a part in driving down U.S. Treasury yields, which in turn pushed mortgage rates lower. And two, global uncertainty. With all the economic shifts, such as trade talks with Colombia, are making investors more cautious, again leading them back to bonds, which helps keep the mortgage rates from climbing too fast. So what does all that mean for you? Of course, lower mortgage rates could make buying a home a little more affordable than it was just a few months ago. So those two things played a huge part into why mortgage rates are trending downwards. So what's happening with home sales? December saw a jump in home sales, with existing home sales rising 2.2% from November and 9.3% from last year. As for new home sales, that also climbed. It went up 3.6%. And all that sounds good, right? Well, there's a catch. Pending home sales, which gives us a peek at future trends, dropped 5.5% in December. This suggests that January and February could see lower home sales. So if you're thinking about selling, you might want to consider listing sooner rather than later, before the market slows down again. So the takeaway from the home sales overview, the market is improving, but not consistently. So if you're a buyer, lower mortgage rates might help. If you're a seller, acting sooner could be the smart move. Next, what's happening with home prices? Home prices are still on the rise, but at a much slower rate than 2020 and 2021. As of right now, prices are up about 3.8% year over year. The biggest price gains are happening in places like Chicago, Washington, D.C., and New York. Meanwhile, Tampa is one of the few places seeing home prices decline. So what does this mean for buyers? You might not see the crazy price jumps like the years before, but homes are still appreciating in value. And for sellers, your home is still likely gaining value, just not as fast as it was before. Pricing it right is more important than ever. While some of us were hoping for rate cuts, the Fed is playing it cautious due to inflation concerns. And looking ahead, no major rate cuts are expected before the June 18th meeting. If inflation stays in check, we should hopefully see some cuts later in the year. This matters because mortgage rates are influenced by these decisions. The Fed's pause means we might not see dramatic drops in mortgage rates just yet, but they also aren't expected to spike. Looking back at 2024, it was a tough year for real estate. Only 4 million homes were sold in 2024. It seems like a big number, but that's the lowest number since 1995. The market struggled due to the high interest rates and affordability challenges. But the good news is sales likely won't stay this low forever. So what's needed for a turnaround? Mortgage rates need to settle into the 6% range, and home prices may need to soften in certain markets to make buying more attractive. So with this spring coming up, If mortgage rates continue to decline, we could see more buyers entering the market by March and April. Stay tuned to the Fed's meetings in March, May, and June for signs of rate cuts. And if the inventory keeps growing and rates stay reasonable, we could see a more balanced market in the second half of the year. Let's take a moment to talk about buyer confidence. One of the biggest factors influencing the market right now is how comfortable buyers feel making big financial decisions. As the mortgage rate drops, we typically see more buyers entering the market. But with global economic uncertainty, some potential buyers may still wait on the sidelines. And for sellers, timing the market is always tricky. Right now, with lower rates, we could see a small window where demand increases before competition grows in spring. If you're considering selling, working with a realtor who understands these trends can make all the difference. Another factor to keep an eye on is the housing supply. More new homes are being built, which could relieve some of the inventory shortages that we've seen over the past couple of years. This means buyers have more options and slightly more negotiating power in the coming months. So in close, the real estate market is shifting. Mortgage rates are falling, but not for the usual reasons. Home sales are showing signs of life, but there's still many challenges ahead. So whether you're buying, selling, or investing, staying informed is always key. If you want to make a move and not sure where to start, let's talk about your options and create a plan that fits your goals. I'm helping people just like you every day. You can reach me at 931-486-4537. All of my contact information will be down below. Thanks for watching, and I will see you guys next time.